Welcome back. I hope you're having a good morning. Well, the SGX Nifty is suggesting a more or less flattish start, but there are plenty of stocks to discuss, and we brought you our top 10 segment. But let's discuss all of those with Dipan Mehta, Director at Elixir Equities, who joins us this morning. Morning, Dipan. Thanks so much for joining in. Well, the first stock that we discussed was Wipro. They're going to be, restructuring their business. What's your take on the IT pack? Yesterday, it got a hard knock. Now, the Nasdaq did rebound overnight. So maybe we'll see some green on IT names today. But what's your preference on the IT pack?
Good morning, Najal, and thank you for having me on your show. I think, Wipro and many of the other companies, they are truly being impacted by the slowdown in IT spending globally. And although those were not easily visible in the December quarter, but the way the stock prices moved and the continuous adverse news flow on the key geographies they operate in lead us to believe that maybe next few quarters could be soft. And the way to play IT has to be through selective stock selection. And by that, I mean focus on companies which have continued to maintain growth rate because they are in a specific vertical, or they have a special offering, or they are in a strong position with certain clients. And the companies which come to mind are companies like Persistent Systems. I think if you look at the numbers for the December quarter, you can't believe that there's any slowdown in the IT sector. Same holds true for Coforge. And even Tata Elixir, I think, reported excellent set of numbers. So within the IT pack, our focus is on mid-cap IT companies, which are in a very specific vertical where growth rates have not been impacted, where IT spending continues to remain strong. They could be in technology, in automobiles, tourism. I think there are those few sectors where IT spending remains pretty much robust, and the companies which service those verticals are the ones we need to focus on.
Dipan, good morning. What are you picking up on Z? Because yesterday saw a sharp cut. It's back in the F&O segment, though. I mean, I think the bigger thing is this settlement with lenders and that merger with Sony. Is it giving a one-off kind of opportunity, or is it a bit of a no-go at this stage? What's your sense?
Good morning, Prashant. Very difficult to call. And, actually, I put Z on the back burner. I just want to wait for this actual merger and see how the consolidated financials emerge and what are the synergies and how they're able to extract those synergies and take the business forward. Per se, media stocks have gone nowhere. And overall ad spends or the kind of competition they're getting and disruption from the OTT players, that's not going to go away. And specifically, Z's OTT offering is still a long way to go in terms of turning solidly profitable. So it's a very confusing picture, and it's better to just wait and watch. Optically, the stock price certainly appears to be cheap, no doubt about that. But the prospects and the mergers leave a lot of uncertainties on the table.
Okay, well, I have many more questions for you. Also, what's happening with commodity prices, right? Rubber prices are on the lower side.